If you take a look at some Bitcoin, some of the software SaaS stocks, the diversions from the NASDAQ, Bitcoin is saying there's a liquidity issue. There is this incipient banking crisis waiting to happen, and that's what it's telling us, I think. Crypto looks forward and says the longer this war goes on, the more money is printed and rallies, even if equities fall, or crypto gets spanked like equities, US equities in particular, as people degross their entire portfolio. It's like, okay, war is bad. I don't know what's going to happen. Obviously, this is going on longer than they told me it was. So let me just sell everything and sit in cash, right? And everything means S&P, NASDAQ, Bitcoin, right? You sell it all. And then it goes down with equities until we get we're going to print the money, and then it goes right back up, right? So I think in either one of those scenarios, I don't know which one is more likely than the other. So I wouldn't, if it was my money and I am doing this with my money, I'm not buying anything. I'm just sitting there looking at the charts and waiting for a signal.
One of Arthur Hayes' first observations focuses on a fundamental principle of market behavior. True market bottoms are rarely formed in a single move. According to his experience trading across multiple asset classes, markets typically revisit major lows before confirming a durable bottom. If Bitcoin's recent low near $60,000 was indeed the cycle bottom, Hayes would expect to see that level tested again before a sustained bull market begins. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Usually you'll retest the bottom. So if 60,000 was really the bottom, then I want to see 60,000 tested again and that level hold. So I don't know if we're at a bottom. I would say that, from my years of trading markets, you do test the bottom at least twice. And so I don't think so. I don't think we can call 60,000 the bottom. It might be the bottom, but I would want to wait for a confirmation test of that level. Crypto looks forward and says the longer this war goes on, the more money is printed and rallies, even if equities fall, or crypto gets spanked like equities, US equities in particular, as people degross their entire portfolio. It's like, okay, war is bad. I don't know what's going to happen. Obviously, this is going on longer than they told me it was. So let me just sell everything and sit in cash, right? And everything means S&P, NASDAQ, Bitcoin, right? You sell it all. And then it goes down with equities until we get we're going to print the money, and then it goes right back up, right? So I think in either one of those scenarios, I don't know which one is more likely than the other. So I wouldn't, if it was my money and I am doing this with my money, I'm not buying anything. I'm just sitting there looking at the charts and waiting for a signal.
Why hold ETH then? Like, what are the reasons to be bullish on ETH at this point in time?
I mean, I haven't really thought too deeply on it. At the end of the day, it's still the largest and most secure decentralized computer, period, right? Yes, they need to figure out this sort of economics of the L2s versus mainnet ETH and how that works and where all the value is being accrued. I haven't read it. I know Vitalik has now been posting a lot more about his roadmap for ETH and all that sort of stuff. I mean, I'd say that as a percentage of my portfolio, ETH has steadily fallen, and I've sold it to buy other stuff. And if Zcash performs like I think it will perform, or Hyperliquid, we'll get the situation soon where ETH is like the number 4 largest asset in my portfolio. And while it is a large notional amount of money, it just doesn't really matter at that point. I don't think it's going away, so I don't feel uncomfortable holding it because it is the most solid L1. I don't really see any other L1s that have an ability, at least right now, to outperform. I think Solana is obviously the next biggest contender, but then what are they going to do after meme coins? I think is the question for Solana. What's the next thing that they're going to be known for? Unless meme coins come back, I don't know. Well, Bitcoin at 670,000 or whatever is right now is definitely factoring in this potential massive, well, I don't think it's potential, this massive deflationary event as, a certain percentage of the knowledge workforce, at least in America, are no longer have a job, and they no longer can be able to service their high debt loads, and they won't be able to consume with the same propensity that they did before all of these AI tools. I don't think the market is recognizing that yet. We're still in the, of course, not 100 people are like, oh no, AI is going to lead to retraining. Okay, well, how many people were retrained after they lost their, job with full lifetime benefits because China was more efficient? How did they retrain? Did they get the same kind of job when they got back in the workforce? I don't think so. I think they got a job. Definitely wasn't as the bennies weren't as good. They weren't making as much money. I mean, these are the people who voted for Trump in 2016 and 2024.
Three times.
So three
Yeah.
times, right? This is the cohort that Trump went after. And so obviously this retraining narrative, yes, you retrain for something, but did you retrain to make the same $250,000 a year salary, or did you retrain to become an Uber driver making 50? Right. So again, I don't know what retraining means. I think a lot of the financial analysts are still stuck in this. Oh, there's creative disruption. America's capitalist model will find something for these folks to do, and then they'll rejoin the workforce and continue to spend money like they were. And so that's the narrative right now. And so that until that narrative breaks, we're not really going to see the contagion effect in what I think of the regional banks, the smaller banking outfits that don't have a government guarantee, that have a lot of these consumer loans as a higher percentage of their balance sheet than, say, a JP Morgan or a Citibank. And the Fed's discount window is not set up to accept assets that are essentially worth zero, right? If somebody loses 10% of the workforce loses their job, they're not going to be able to service these debts. It's not it's a liquidity issue. This is a solvency issue for the people who borrowed this money. But we're not there yet. But I think it's going to come faster than people think, because if you look at the progress in terms of these agentic AI models and what they can do, it's insanely exponential. This isn't like China entering the WTO. If you want to offshore a factory, it takes multiple years to do that before you get to the management approval, are able to construct something new, all the things you have to do. But if $20 a month Claude bot or however much it costs can replace a whole team of back office counting, that's instant, especially in the United States where you have an at-will employment market and there's really very little labor protection for people. There are going to be more companies like Block who fire a large swath of their workforce, and they're rewarded by the markets. The stock pumped 20% when he announced them. The CEOs and management get richer if they fire all their workers and replace them from AI. That's the message from management. And we know management only cares about their compensation. And so they're going to do more of this. And then there'll be this moment where everyone recognizes, oh shit, these reports, yes, they were directionally correct, but unemployment went from 4% to 8%. And then some people start freaking out. And that's when you get the repricing of a lot of these debt instruments down to an assumed value of zero, and how you get a banking crisis.
Interestingly, Hayes believes Bitcoin itself is already signaling that something may be wrong beneath the surface of the financial system. In some cases, Bitcoin has diverged from traditional tech stocks, suggesting underlying liquidity stress that equity markets have not yet fully recognized.
Well, the Fed is a reactionary political institution, and we know that there is a large percentage of Fed governors that hate Trump's guts. The last thing they're going to do is start lowering the rates if there's not an actual crisis. What crisis are we talking about? If you listen to the rhetoric from the Fed governors, it's AI is a great productivity tool. It's going to elevate the productivity of the US worker. There will be no unemployment due to AI. This is what they're saying. So how can they then go and say, oh, it's going to decimate the workforce, so let's print a bunch of money? So until you get the actual market stress related to increase in AI-related job losses, the Fed cannot act. And so we need to have the signal from the market that something wrong. And the signal is not Bitcoin, right? Because the Fed doesn't think Bitcoin's a real thing. The signal is, the regional bank index is down 45%. There's banks that are getting smoked, 15, 20% every session in the United States. That's the signal. That's when they have to step in. That's when they have the political cover to do whatever they want, which is to print a lot of money, because the politicians are going to be crying for it. All these people who were their biggest political supporters, the backbone of sort of the intelligentsia in the United States, no longer have a job anymore and are in the breadline, just like the guy from the hood. And what is that going to do to somebody's ego? They're going to be calling up their representatives, fuck this AI thing. What are you doing for this? We need support. We need more unemployment insurance. We need this. We need that. I supported you, right? These are the most politically active people who are now going to be out on the street. You don't think they're going to call the representative and demand. If you take a look at some Bitcoin, some of the software SaaS stocks, the diversions from the NASDAQ, Bitcoin is saying there's a liquidity issue. There is this incipient banking crisis waiting to happen. And that's what it's selling us, I think. What I'm saying is not that AI takes everyone's job, which I think is a strong argument for people who say, oh, you're full of shit, Arthur. AI is not going to take everybody's job. I'm saying that's not my point. My point is that 10 to 20% of job losses in knowledge work is game over for the banking system because of how much leverage is employed, right? I don't need everyone to lose their job, just a little bit. And then the market goes, oh shit, everyone's going to lose their job, even though that's not the case, right? So right now it's nobody's going to lose their job. You're an idiot. To 5% and 7% unemployment, everybody's going to lose their job. Let's sell everything, right? So there's an overreaction on both ends. It's the overreaction on the rise in unemployment and the narratives around AI, which leads people to move their money out of the small banks into JP Morgan and to dump these stocks. And that's where the Fed has to come in and act. So it's all of a question of like your framing and how you look at and forward price some of these outcomes.
If we saw like a Bitcoin rally in the coming months, like if we rallied back to like 100K, would that change your thesis, or would you still hold there?
I'd say, okay, well, let me look at some other indicators to see if there's something else going on. Let the price tell me, okay, well, obviously the price went from 124 to 60, so something's happening. Okay, what else is happening alongside that? If Bitcoin rallies to 100,000, is there some credit that's coming in, or what's happening? And taking it as a singular thing, I wouldn't say I'm right or wrong based on my thesis. I'm structurally long all this stuff. I don't like to short things. We've raised a bit of cash at higher levels, so we have dry powder ready for if we fall to those levels. And again, if we fall to 35K, I have to ask myself, what is true that wasn't true before? Has a politician come out and said, we are going to enter a period of austerity, we've spent above our means, we are going to restrict credit, and businesses that shouldn't be around will not receive credit anymore, and therefore we're going to move to a healthier ecosystem and economy? If I hear that and we're at 35K, okay, maybe I need to reevaluate my long positions in a lot of these risk assets. If I'm not hearing any of that, and this is just we're going to 35K because there's political sclerosis at a lot of central banks, and for whatever reason they can't hit the money printer because of their domestic politics and how their voting systems work, they're like, okay, cool, the market has some volatility, thankfully I don't use leverage so I can handle this. Yeah, my market is a massive negative number, but it doesn't really matter in the grand scheme of things. I'm going to continue to hold. I might be buying into some more assets just because the prices have gotten lower. So it really is a function of like, what is the monetary situation and the belief in terms of what the world economy should do going forward.
What are your thoughts on the agentic economy, right? Because that's another big part of a lot of these kind of AI pieces that it's like, listen, like the one bullish thing is crypto because that's what all the agents are going to use. You're clearly a proficient AI user yourself. Is that true? Are all these millions of agents, they're going to be transacting in stablecoins on ETH? Is that, what's the list like?
I mean, it could happen. And then the question is like, just because there's a lot of transaction volume doesn't necessarily mean that that particular token goes up in price, right? What are the tokenomics of that ecosystem? How does the burn work? What's the inflation level? So yes, you could have a massive amount. Did the agents create their own cryptocurrency between themselves that now we have to go and adopt as the meat market, the human market? So I don't know what that situation is. I do believe that AI agents naturally should use some sort of blockchain-based cryptographic currency. Whether it's one of the ones that we've already invented, I don't know. If you take a look at the release schedule and the proficiency of some of these models, even over the last 6 months, it's like a factor level higher. So I think that this could happen within the next 3 to 6 months in terms of a common knowledge recognition that there will be this massive wave of unemployment. So right now we're starting to see the trickle effect of certain tech forward companies like Block saying, wow, I've adopted some AI tools. Again, they're not the best yet. They're getting better and better, exponentially better over time. And I already was able to right-size my workforce by 40%, right? And so I think that more of this is coming. And if a CEO looks at what Jack Dorsey did and saw the stock price go up 20%, what do you think they're going to do? They're going to fucking HR, look at AI. How many people can we fire? I want my stock price to go up.
Yeah.
Right? That's the response mechanism.
Mm-hmm.
So this only accelerates the trend. I fired 40% of my workforce, said the AI magic word in the press release, and my stock price went up 20%. Like, no brainer. The biggest key is a lot of protocols make a lot of money, but then they don't give it back to us as the token holders. So you really have to, what is the mechanism between taking protocol fees and profit to me as a token holder? Mm-hmm. It's either two things. Either they're going to buy back the token and burn it and reduce the supply, or they're going to give me some sort of emission by staking the token. That's it, right? And so if you're not doing one of those and you make a lot of money, fuck yourself, because you're not giving the money back to me as the token holder. And I don't give a fuck what your reason is why you're not doing it, because if you're not doing it, I'm not holding your token, period, end of sentence. And so I think that is the level that we've gotten to over, almost 10 years in this DeFi situation since the ICOs of 2017. We finally matured enough as investors to see that essentially our capital has been eviscerated and incinerated by a bunch of projects that either had no clients, paid no money, and that money, even if they made it, never made it back to us as the token holders. We're done with that. Everything is hyperliquid or a zero. And so I think hopefully this is going to incentivize founding teams at projects who are making money to sort of get off their ass and start giving us the money back as token holders. Because if you don't, then your token can stay down in the doldrums while everybody fets hyperliquid.
Arthur Hayes' macro framework ultimately leads to a simple but powerful conclusion. The long-term direction of crypto will not be determined solely by technological innovation or market sentiment. Instead, it will be shaped by global liquidity cycles and systemic financial stress.